Here to help the investment pros, Hillary Kramer's back, A&G Capital President and Chief Investment Officer. I notice when you come back, the market's up. I don't know what it is, but keep doing it. Okay, we've got Monster Worldwide Senior VP Joni Courtney with us as well. Jim Frischling's back as well, President of NewOak Capital. Scotty, Jim, your assessment on the whole thing, the day's rally, and also that sort of divergence finally between oil and stocks.
Well, I mean, you can take your pick. Clearly, you can talk about the Fed. You can also talk about good economic data, the jobless claims. You can talk about the Philly Fed. You can talk about earnings, Accenture, Rite Aid.
Oracle, a big name that with coattails.
So again, did I expect a 400+ point rally? The answer is not remotely. But I will say the Fed did calm a lot of concerns. I think the patience. We are wordsmithing now, but people believe the rate environment is a risk on, and then you got good earnings and good economic data as this thing took off.
Ironically,
she talked about the labor market. It's still contracting. Labor participation, the size of the workforce, wages, those things are still a concern.
I just want to say, we're talking about the U.S. market now. We've been talking about it as a safe haven. If you're in the emerging markets, if you're in the debt markets, Russia is getting absolutely destroyed. I know we're going to talk a little bit about Venezuela and others, but there are debt markets in outside of the U.S. that are suffering right now, and they're not separating from oil. They're being tattooed and really hurt.
So the bottom line is sometimes it's great to be the tallest midget in the world, although I hate that saying. Hey, Bob. Well, it's called competition, Jim.
Yes,
will competition work? Will something move the needle and get banks to start lending to small businesses and would-be homeowners next year?
I love that. Joni teed me up for a Gordon Gekko. Greed is good moment. Greed is good. Here it comes. You want the banks to lend? You can't have it both ways. You can't tattoo the banks with litigation and regulation. The government is trying to de-risk the banks by getting certain lending businesses away from them. Now that creates an opportunity for the peer-to-peer lenders to step in. But this is not free money. There's less regulation on peer-to-peer. There's less insurance or no insurance. There's less due diligence, I have to say, on these transactions. The peer-to-peer lending business will survive if they can get through their first challenge, their first failure. But get ready. People are going to be pretty upset when they look to the government and say, where are you protecting us in this peer-to-peer?
Okay,
banks will step back in. They'll step back in when they can make money. The PEs took over from the bank's prop books.
Private equity
took over the bank's prop books, and peer-to-peer lending's taking over some retail businesses that aren't worth the risk return.
This brings us to our next lending club went public recently. I like it a lot. I know Matt is out ill today, by the way, guys. He doesn't feel well. He doesn't like it. Jim, how about you? What do you think in the banking area? Something that if we do see the banks follow at least what we're getting, the hints we're getting on the economy, and start to put money into the American economy, who wins?
No, actually, Scotty tossed me a softball. I was going Wells Fargo. The resi market, they are the dominant player in both residential and commercial. I think they are incredibly well thought of in terms of how they're managing their books of business, their risk. And I think as rates go up, 50% of Wells Fargo's income comes from the net interest rate margin. In a rising rate environment, they'll make more money. So Wells Fargo.
In other words, they're going to be a lot more volatile. So if that's not your cup of tea, these aren't your stocks. But I think all three of them really do pretty well in the near term, particularly Twitter, which I think is the most oversold if they ever get rid of the CEO. What do you think?
You know, on FireEye, this is their moment. And yet I think they're having a hard time despite very good revenues and expansive R&D. So I do like that one. And I'll be a little contrarian on Twitter. When I hear burning cash, well, I agree. Their dominance is unbelievable, but the burning cash kind of scares me.
Takes you back to 2000.
Takes me about to 2000. And I'm like, that you can't have a business model that's burning cash.
Well,
but also, we're all afraid of this terrorist threat. But
I was going to say, a lot of people are speculating about what Sony's going to lose on this. And I think the simple answer is we don't know. Because unlike a Target attack, unlike a JP Morgan attack, it was done. This isn't done. I don't even know what inning we are. No one knows what they don't. Sorry, I don't know what I don't know, but I know this. I don't know enough about this story. Sony has, and in the whole movie industry, the other studios put pressure on Sony to back off this thing. So we don't know what else is out there. But the loss to Sony, I can't cap it yet because this
it's a money play.
Except for Palo Alto, I mean, the rest of them are sort of languishing. What is the deal there? That's the part that's a little frustrating. You can tell them in FireEye.
I think a lot of companies still believe it won't happen to them. I mean, how many of us have some kind of LifeLock or personal
Isn't
cyber
that the
protection?
story here, though?
And the story is that I think everyone has to recognize as a business and as an individual, you're going to have to start protecting yourselves.
So if I'm a CEO, all right, Jim, you know, it's really crazy because we started out the week with Russia on the ropes, okay? And then, of course, Venezuela's in trouble. And then what happened? How come we blinked on this thing? It really, to me, it looked like if we would have waited a little longer, whatever the objective was, and I think, by the way, this isolation did work. It didn't work for Cuba, and it wasn't hurting us. So what was behind this?
You know, I watched the business community react to this, and despite all the political rhetoric, you got GM, you got Ethan Allen, you got Cargill, among many other companies, I'm assuming, were very enthusiastic about potentially having another partner, or rather, another country that has consumers that need our stuff, and there's stuff we probably could use from them. So I look at Russia, and, well, it's a completely different scenario, clearly, for their attacks on the Ukraine, far more political, far more, I guess, I'll say a threat. But the fact is, military action put them in the corner. Cuba, at this point, you know, human rights issues, I get it. It's huge. It's 54 years ago. Let's open up and have a conversation.
No, wait. That's where you're wrong. You don't think there are human rights issues going on in Cuba yesterday? You don't think some dissident got his knees broken in some dark cell in Cuba today?
Charles, I so respect that. We got some human rights issues going on in our own country. We would watch them the last couple of weeks on TV. We're having some issues we're looking into. But the fact is, as a business perspective, I think there's going to be a lot to be done with Cuba.
All right, let's get down to help make you some money. The stock idea today is Lifepoint, the ticker symbol LPNT. It closed up over 4%, $72. I've mentioned this, I would say it's about 5 weeks ago. Listen, I still think that this is an amazing place to be in. You know, I talked about that Philadelphia Fed report where 66.7% of these businesses, manufacturing, already said they're spending more on healthcare. Let's face it, you know, retold, yeah, but the government pouring money into this space. We know that the baby boomers are aging. We know that these guys are consolidating this space. This company, by the way, has done some major deals, and they are typically smart about it. I haven't seen any bad deals that have derailed them. They know how to assimilate these deals very well. So this is what I like for your 401k. I think this is one you can hold for a few years and feel pretty good about. What do you think, Jim?
No, I'm glad you said that. I see this as a long-term position, a long-term hold. They have a very impressive balance sheet. Their commitment to an acquisition strategy is helping them. And earlier in the show, you talked about the one area where costs are going up, which was healthcare. This is the company that benefits from costs going up. So they're the recipient, the beneficiary, and I really like the pick.